Hello, everybody. Today is Saturday, April the 27th, 2013. My name is Michael Wright, and this is the Weekend Elliott Wave video. Just before going forward, please do pause the recording and read over our risk disclaimer. All right, so let's jump into performance as we look to close out April. As of late, we are up 468 pips, marking the most since January 2013, and playing out well so far, right? That really extends our that should extend our 3 month rally, posting 4 months positive, and out of the past, I believe, looks like 16, 17 months, only down 1 month. So, performance wise, as you guys note, everything or every trade we take, we do posts. So, a couple break evens, a little bit more than usual this month. But you know what? We are in a positive. I'd rather get stopped at a break even than to take a loss, right? So, even in terms of the amount of hits, that also played out fairly well. So keeping track of about 1 to 2 trades per day, maxing out at 3 trades sometimes. All right, so take notice of that. Now, as we head into the last week of April, or the last 2 days, being Monday and Tuesday, there are a couple of trades we are looking at, kicking off May. For one, Aussie dollar is a bit interesting to say the least. You know what? We got stopped at a break even, I think about 2 to 3 times already. Not taking a loss, but not really much conviction on either side. However, I do like longs, and that is what we will be looking to attack the beginning of next week. Whether it gaps down or holds, I'll probably look to take a long near the open. All right, so watch out for that. Please do join us for the webinar on Sunday, which is at 1600 Eastern, 20 GMT. But the longs, as long as we hold above 102.50, in my opinion, we should then see 104. 104 does represent the 50% Fibonacci retracement on the recent downswing. Ideally, too, if this bottom side holds, then looking for a measured move. That measured move also comes right near 104. So a lot of not a lot of, but we have 3 different reasons to get long and target that 104 area. Again, the measured move 100%, the 50% retracement on the downswing, trendline support holding bottom side. Right, so and also at the same time, is lagging its counterpart being the Kiwi dollar. Kiwi dollar saw a lot of headwind this past week, but quickly ran into some pressure as Friday came around the corner. All right, Kiwi I also like to the top side, possibly 84.50, then looking for 86.13. That gives it a little bit less than 200 pips, while for the Aussie, we're seeing actually just around the same thing, a little bit more than that, now giving way to the Aussie Kiwi cross. Now for the Aussie Kiwi, I do like longs, okay? So that's another reason to pick the Aussie over the Kiwi. Again, we've seen it lagging, but you can see it on the chart. At the same time, the momentum divergence is pretty clear. All right, pretty clear. A nice one-way trade. You know what? I'm a contrarian by nature. I don't like following what other people are doing, and you know what? It works well, especially trading foreign exchange. Why? 95% of people do lose money. A lot of people blow their accounts, etc., etc. So you don't really like. We can see what's going on now, but the viewpoint is always to tell what's going on, what's the next move. Okay, so yes, we do have trendline resistance not too far away, looking at 120, 170, 120, 180. It could possibly test, then come under some pressure, and then break later. That break later is something I will be looking at for some clear signs, or just another additional factor to add to this picture that I'm painting. All right. Same time, again, if I were to put the count behind this nice fourth wave triangle, thrust to the downside, momentum divergence, so looking for that bottom side, again, looking for it to break. All right, and then minor wise, for those who like to count the in the triangles, okay, I'll count that for you too. All right. So again, Aussie Kiwi. Okay, A, B. I'll put the C here. D, E. On average, triangles are continuation moves, hence downside. Alright, so anybody who played that looks good, but next up, I like longs, and then obviously paying out the Aussie dollar long. Alright, that will bode well if we could somehow get into the open and then hold it into May. I think that will be a good win there. Meanwhile, the euro dollar, a lot of range trading going on. However, you can see it kind of holding some bottom side trend line support. Looks like it's flagging. I would say wait for a break to the downside. If we do break and get confirmation, run down to 129.20 about, could play out. Okay. Meanwhile, the pound dollar though, it is seeing some 50% retracement. That's Pound dollar is not one of my favorite pairs right now, but the euro I do like to the downside before another possible rippage. The reason why I'm looking for 129.20 about is one, that's kind of the same. It's kind of almost the same thing as the Aussie, and what I mean by that, the measured move first and then a 61.8 fib. Actually, with the euro, it's a 61.8 fib support and the measured move, and I believe the Aussie was the 50% retracement and the measured move ABC, right? So ideally the same thing, opposite directions. Now we see Aussie higher, we see euro lower, euro Aussie. Okay, very important in my opinion to get your correlations down. All right, they do help out. Now, possible head and shoulders developing. In either case, though, watch this trend line support. Right. If I modify it, okay, here, also possible neckline of a head and shoulders if you could get a little bit higher on this Euro Aussie, and then the measured move will come in a little bit deeper, right? So, possible setup. One thing about Euro Aussie, Euro Kiwi, or Pound Kiwi, those crosses is that when they play out, okay, stops usually have to be wider because they tend to be a little bit more active. I know with my style, I like to stay within the 40 to 50 pip stop range. However, trading a pair like that, you may have to, well, I will have to open it up to, let's say, 60 to 70 because it does move a little bit more. So understand that when you trade these, and respect the market. Don't get too confident and think you're always going to be right because the market will come back to haunt you. All right, so again, risk management is key, guys. So those are a couple of pairs I'm looking at. I will be holding the webinar on Sunday again, so please do join me. I will be more in depth and look at a bunch of other pairs, commodities, and come with your questions. All right, so cheers all. Look forward to ending off April in the green and looking forward to another prosperous month in May. All right, guys, cheers, and I'll see you in the chat room.